Hi guys, welcome to this month's edition of the UK House Price Index, which we do every month. This is a report that comes from Zoopla, and it's a great insight into what's been happening over the past 12 months in terms of the UK house prices, and of course where the restrictions apply in terms of supply and demand. So look, without further ado, let's dive in. So we can see here, this is the top headline figure here, 6.9%. So you've got a 6.9% is the current UK house price growth over the past 12 months. Now, this is taken up to October, although it's published in November, it's actually up until the end of October, as you can see at the top. But 6.9% is phenomenal. And there are some cities that are outperforming this. And of course, they're the cities that we want to be buying. They're the cities that what we've been promoting over the last sort of 5 to 10 years. Now, you can see here, demand is up still, 19% increase, demand for homes versus a 5-year average. And the flow of new supply of homes versus a 5-year average is actually down 21%. So it's pretty straightforward. It's basic economics. It's, you've got an increased demand, a shortage of supply. It's going to create a restriction. It's going to create a house price growth. It's that straightforward. So look, 1 in 16 privately owned homes will have changed hands in the year. It's the busiest ever market since 2007. So it just shows you how positive the market is. And it's not just about people who've got more money, less money, whatever it is. It's all about confidence. If consumers are confident that that things are going in the right direction, they will buy. They will make that change. Also, after COVID, we saw a lot more people far more willing to go and view houses, put their properties on the market. Now, I think what's going to actually happen is we're slowly going to start to see people put a few more properties on the market over the next 12 months as they ease up, as their concern of COVID eases up. And of course, this 21% of supply will actually fall to maybe minus sort of 15, minus 16, but it will still be negative. And of course, the average value of houses from terrace to detached are up 8.3% in the year. Flats didn't increase as much as the actual houses and the terraces, but that's slightly skewed because what actually happens is apartments are taken across the board, city centre, outside the city centre. But let's be realistic. If you're living outside a city centre in a suburb, the reality is, due to COVID, you want somewhere with some space. So a lot of apartments outside of city centres got sold, and they didn't increase, and they weren't as popular as houses with space, with a garden. But city centre apartments are booming again. And the reason being is because if you've been living at home, a lot of people went back to live with parents or grandparents, whatever it may be, over the past sort of couple of years. The young, especially that younger demographic, the 20, 25, up to 30, they want to be back in the hub of it, back in the mix, coffee shops, bars, restaurants. They want to be with their friends. They've not had their friends for the last couple of years. So they want to be back in the mix of things. We're also seeing offices go back to work. And again, because of that, people are suddenly realizing that the commute isn't what it's cracked up to be. So again, what happens is they start to rent in city centre apartments, maybe only for 2 or 3 nights of the week, but they start to have those short-term rentals. And of course, that puts more pressure on the amount of stock in city centres. So look, as we move down the report, it of course heads into the UK house price inflation. This year, 6.9%. Last year, 3.5%. That is a huge difference in terms of the actual house price increase. And you can see here what the annual growth is. Again, let's have a look at this purple line where you can see what's taken place over the last sort of decade or so, where things have been going. We obviously had 2011, 12, things pushing on, and it peaked, look at 14. Then, of course, we had a bit of a peak around May 16. That's when we had a bit of a stamp duty change for buy-to-let investors. That was that peak. And then it sort of tailed off. It's always been increasing, don't get me wrong. Right from sort of 2013, we can see that there's been a steady increase, but whether it be 1% or increasing over 7% a year. But the reality is we're now back to that peak where it was over 7% a year. I think it's going to tail off, and I think next year is going to be between that 3 to 4% growth. So it'll probably come down to 3 or 4%, but it's still growing. Regardless of where you are on this graph, the market is still growing. You've got here Wales continues to be the highest rate of house price growth across the regions. I personally still don't think Wales is the best place for a buy-to-let. There are certain pockets which are great, but as a whole, I still think there are better areas. And if we look at the northwest, at 9%, to me, that's where you want to be going. Your Liverpools, your Manchesters, and we'll come down at the end to the actual table which demonstrates this. And you can see the quarterly price growth has eased very slightly, especially London. I mean, we've not been promoting London for a number of years. Again, you get something half an hour from London that looks great, or you get a good price on it, 100%, it's got to be something that you take a look at. But typically, we have to look at on average, and we're looking at sort of like the northwest is 3.6%. If you take out Wales here, then it'd be the northwest that's peaking. And then as we move down, this is the crux of it. The UK largest cities, Liverpool, Manchester, Sheffield, they continue to show the highest rates of growth. 10.6%, that's phenomenal growth for Liverpool. 8.7% for Manchester, 7.9% for Sheffield. They're all phenomenal growth. And again, I still think that's going to continue around 4 to 5% in the top areas, 3 to 4% on average in the UK, but 4 to 5% plus in the top areas such as Liverpool, Manchester and Sheffield. And again, we look at Aberdeen, and this is one of the only places that's fallen edge slightly down. But the reality is with the forecast, again, Zoopla have expected prices to end 2022 firmly in positive territory at 3%. We think slightly higher, especially because supply is still restricted, especially on new homes. But the reality is it's still growing. If you're getting 4 or 5% net income and 3% net growth, you're still getting 8%, 7, 8% income per year or growth in your property as a combined income and growth. And the reality is that's far better than what most people are doing in any bank, any stock, whatever it may be. So let's talk about the supply. Now, house price growth is easing. Supply, I think, will start to increase, but I still think it's going to be well restricted in 2022. You can see here that the buyer demand remains far higher than in usual levels, continuing to run 28% higher actually than the 5-year average. And actually the new supply of homes being listed for sale has been running at 5 to 10% below typical levels seen between 2017 to 19. But what we have to look at is we have to look a bit deeper behind those figures. The new supply of homes being listed for sale, well, the reality is what that could also be is the fact that there aren't that many new homes about to be listed for sale. So a lot of people might look at that and think, well, new homes aren't being listed. Well, the reality is that costs for building new homes have gone up. Price of timber rose 60%. So a lot of people have thought, or a lot of builders, I should say, have thought, well, actually, I'm not going to build just yet, or I'm going to delay things. So actually, that's why a lot of new homes have been restricted in being listed, because they're simply not completing at the moment. So then we sort of move down, and the number of houses available for sale is down more than 50% compared to average levels. But for me, the crux is always at the bottom. And as we head towards the bottom of this graph, and I'll come back up in a minute, if we head to this particular table at the bottom, this is the best cities. You've got Liverpool, Manchester, Sheffield, which we've covered, and it moves on. Belfast, Bournemouth, Nottingham, Leicester, and so on. And look at those top 20 cities. It's amazing what growth the majority of them have had, again, bar Aberdeen. But as I say, if you head towards the top 3, you only need the top 3. There are a couple of other cities that we're looking, but the top 3 is really where you want to be looking to make that purchase. And as we sort of head back up and you start to look at the increased demand, the erosion of stock for houses, and again, this is key as well. So the average flat has risen by only 1.6% over the last year, slightly above average. But as I say, that's really taken into account. And what drags that down are flats within the suburbs. I can assure you, if you take flats within city centres, that price will be, or that percentage will be dramatically increased. So as I say, that's why we always promote the city centre apartments. And look at the outlook. So this is Zoopla's outlook. The new supply will start to rise at the turn of the year, which, yep, we agree with that. Typical years, the highly seasonal supply of homes being listed, sales runs slow at Christmas. And then, of course, come the spring, people are more open to listing their home. A lot of people at Christmas, actually, the biggest day for portals on Rightmove or on Zoopla is actually Boxing Day. A couple of reasons. One, people have got all new computers, iPads, so they're looking around on the internet. But actually another reason is people realise their house isn't as big as they thought it was when they are crammed in with a load of other family and friends. So what happens is people start to look at bigger homes. So the biggest 2 days on Rightmove and Zoopla is in fact Boxing Day. So we think that the buyer demand is going to remain strong moving into next year. So does Zoopla. They think it's going to normalise those slightly in terms of the mix of buyers, but we actually think it's going to outperform the 3%, which Zoopla predicts. And again, we should see the ease of constraint in supply. Again, that's something that we totally agree with. Bank of England's interest rate, are they going to raise that rate in December? Are they going to wait till Feb? That's a tough one. Originally, I thought they would always wait till Feb. I thought they should wait till Feb. And then, of course, we had that bumper inflation come out last month, which may have sort of turned the tide slightly. But I still think, give it another couple of months till Feb as things start to ease up. Because for me, rising the interest rate isn't going to have too dramatic an impact. The fact is, it's energy prices, petrol prices. The reality is it's not about restricting what people have got in their pockets. If those costs are high, they're high, regardless. So overall, guys, we still think that the property market has got legs. We still think there's a great movement in this over the next 3 to 5 years. So it's 100% worth still looking at. And of course, we're always at the end of the phone, always at the end of an email. And of course, if you want to come in and have a chat and have a coffee with us, we welcome you with open arms and we can run through exactly what might suit you. Take care.